quite late in many other parts of the world. So thank you for taking your time and joining us today in this extraordinary and challenging time. As you can see, we are doing things differently. Some of you have already submitted questions in advance. Thank you. But I would like to encourage all of you to participate in our discussion by submitting questions online. Let me introduce today's speaker. I'm here with Mr. Chong-Yeon Ri. He's the director of the IMF's Asia and the Pacific Department. He will give a short opening remarks before we take questions from you. Chong-Yeon, the floor is yours.
Thank you, Keiko. Good evening and good morning to those joining from Asia. I hope you and your family are doing well and stay healthy. I'd like to thank doctors, nurses, and first responders all across the world for their hard work to make us stay safe. Let me start by summarizing our key messages. These are highly uncertain and challenging times for the global economy, and Asia-Pacific region is no exception. The impact of coronavirus on the region will be severe, across the board, and unprecedented. Asia's growth rate in 2020 is expected to be 0%. This is worse than the growth rate during the global financial crisis and even during Asian financial crisis. Actually, Asia has never experienced zero growth rate in the last 60 years. That said, Asia's current growth rate still fares better than other regions. For 2021, there is a hope. If containment policies succeed, we will see a rebound in growth. However, it is highly uncertain how this year will progress. This is not a time for business as usual. Asian countries need to use all policy instruments in their arsenal. Let me expand on this point, starting with a question: why Asia's growth slowdown is much sharper than during the global financial crisis. First, unlike during the global financial crisis, Asia's real sector, especially the service sector, is being hit hard by containment measures. Second, advanced economies slow down. They are a major trading partner with Asia. Is much more severe. U.S. growth rate is minus 5.9%. Europe's euro area growth rate will be around 7.5%. And you can imagine what kind of impact it will have on Asia's export sector. Third, China's slowdown. As you know, China's growth did not change very much in 2009. The growth rate was 9.4%, thanks to the enormous stimulus package, which is amount to about 8% of GDP at the time. But we cannot expect that magnitude of stimulus in China, and this time China may not be able to bail out Asia's growth rate. Now let's move to the country forecast. The substantial downward revisions in 2020 are across the board. China is expected to grow by 1.2% in 2020. We expect a rebound in economic activity later this year. This is because China is emerging from this outbreak first. Nonetheless, there are clear risks. The virus could come back and the normalization could take longer. In Japan, real GDP is expected to decline by 5.2% in 2020 with sharp deterioration of external demand. For Korea, we anticipate growth in 2020 to be at 1.2%. The negative impact on growth is relatively smaller than in most other advanced economies, reflecting their effective strategy to flatten the infection curve, which has avoided major production shutdown. In India, growth has been revised down to 1.9% for fiscal year 2020. India entered the pandemic turmoil in the midst of a credit crunch-induced slowdown, and its recovery path becomes more uncertain. Despite the short-term economic slowdown, the government implemented a nationwide lockdown, and we support this India's proactive decision. In Australia and New Zealand, growth in 2020 is projected to be -6.7% and -7.2% respectively, reflecting significant economic disruption from social distancing, lower commodity prices, and lower fall in demand. We revised down ASEAN 5 growth rate to -1.3%. Impact from reduced tourism, disruption of trade and manufacturing sector, and the spillovers from financial market are currently significant. For the frontier economies such as Cambodia, Laos, Myanmar, and Vietnam, the export and tourism-driven economies are likely to be significantly disrupted, even though they seem to be at the beginning of epidemic curve. For Pacific Island countries and small states, their growth rate is expected to contract by about 2.3%. These countries are among the most vulnerable given the limited fiscal space as well as comparatively underdeveloped health infrastructure. So now let's move to our policy recommendations. This is a crisis like no other. A full arsenal of policies is needed to respond to the virus shock. The first priority should be to support and protect the health sector. Targeted support to hardest hit household and firm is needed. We need to protect people, jobs, and industries directly, not just through financial institutions. The pandemic is also affecting the financial market functioning. Use monetary policy and macro-prudential policy and regulation flexibly to provide ample liquidity to viable industries and small and medium enterprises. For emerging markets with limited fiscal space, they might need to consider how to use central bank balance sheet flexibly to help small and medium enterprises through risk sharing with the government. External pressure need to be contained. Countries should seek bilateral and multilateral swap lines and financial support from the multilateral institutions. There can be a role for capital flow measures to secure external sector stability as a prerequisite to use more aggressive domestic policies in preventing lasting social and economic distress. Targeted support combined with domestic demand stimulus in a recovery phase will help to reduce scarring, but it needs to reach people and smaller firms. I will conclude by saying a few words on the role of the IMF. So far, 17 Asian countries have expressed their interest in our two emergency financing instruments, the Rapid Credit Facility and the Rapid Financial Instrument. I'd like to take this opportunity to convey our thanks to Japan and China for their generous contribution to the Catastrophic Containment and Relief Trust initiatives. Thank you, and now to your questions.
Thank you, Chang-Yan. Again, we encourage you to submit questions online. I would like to take this question from Ender Curran from Bloomberg. He's asking, can the economies of Asia recover on their own, even if the rest of the world, such as the US and Europe, are in recession? And secondly, should governments in Asia implement capital controls to contain outflows?
Okay, I think it will be very difficult to imagine that Asia can recover on its own without seeing the global slowdown of the this virus spread. And the virus does not discriminate the borders. And if the virus continues to spread out abroad, then Asian countries will be very hard to ease their containment measures, which has a still large impact on their domestic activity. And also, I want to emphasize that many Asian countries has an export-oriented structure. And then this year, the slowdown of Asia's trading partner, advanced economies, the growth rate we are expecting -6.1%, which is really negative. And you can see how it will affect Asia's export sector in the recovery process. As for your question about capital control, if this is a normal period, I should say that the country has to be very careful using capital flow measures, because we do not have a very concrete evidence whether the capital flow measures can have a effectiveness, especially in controlling the capital outflows. But this time is unprecedented. I think many Asian countries will be forced, if the situation becomes aggravated, forced to use large stimulus packages despite their limited policy space and despite that they do not have international currencies. So when they actually rely on large large stimulus packages, they have to worry about its possible negative impact on their external sector, especially the FX market. So I think in this time, I think there is a room for the capital flow measures to contribute to secure the external sector as a prerequisite for the many Asian economies to use their more aggressive domestic policies to prevent this large lasting impact on their economic structure and help the poor and affected peoples.
Okay.
But I want to emphasize that if they want to use this capital flow measures, it should be temporary and should be implemented with a clear exit policy ex ante.
Okay. Relatedly, this is a question from Anthony Rowley, South China Morning Post. Asia has long had a surplus of domestic savings over investment, but much of those savings were invested with financial institutions in the US and Europe, which then reinvested back into Asia, from where they are now fleeing. Do you see any evidence that this pattern is changing and that the domestic saving investment balance is improving in Asia?
I think Anthony's question has two aspects. One is that he's asking whether the saving investment gap has narrowed. And I think the answer is yes, as demonstrated by the current account surplus, which is the basically saving and investment gap. In this current account surplus in Asia was about 5% of GDP in 2007 before the global financial crisis, but now it reduced to the 2% level. China's surplus, current account surplus, was 10% at the time. Now it's lower than 1%. So the saving investment gap itself is declined. But as for the second question, whether the recycling of Asian investment within the region and whether the dollar dominance has been reduced, I think actually it is not. Actually, the trend was reversed. After the global financial crisis, I can say that the dollar dominance in the region has actually increased, partly because of the strength of euro was weakened, and also after the global financial crisis, this capital market liberalization in China, rightly so, is slowed down. So, for example, now many Asian central banks hold dollar as a reserve, about 60-70%, and also more than 80% of the Asia's export and is actually denominated dollar. So dollar invoicing is quite significant. So the dollar dominance still continues.
Another question from South China Morning Post. Which sectors in the Asia-Pacific region is expected to hold strong, even in the current economic climate?
I think it will be difficult to find which sector are actually holding strong, but I think it's easier to find which sector affected negatively most. I think the service sector, especially tourism, airline industry was hit very hard. As for the manufacturing sector in Asia, we see some evidence that the manufacturing sector has not been much affected yet. And in China, after February, we see some sign of recovery in manufacturing activity too. But I think that trend will not last, given as I mentioned, the quite significant slowdown of advanced economies. And we are expecting that the global trade will shrink by close to 11% this year. So manufacturing sector will be hit hard again. So I think except a few companies, such as who sells the medical product, medicines, and some IT-related, teleconference-related products, they may get some boost. But otherwise, I think there is no winner in this crisis.
Okay, I would like to go on to country-specific questions. First on China. Xinhua News Agency Maolin Xion is asking, how do you comment on China's fiscal and monetary policies in response to the COVID-19 pandemic? What more do you suggest policymakers to do as the country gradually reopens its economy? Also, how do you see China's role in global economy in this difficult time?
I think China policymakers have reacted very strongly to the outbreak of the crisis, and their monetary policy and the fiscal policy, rightly so, try to contain the virus first, and then reduce its impact on the economy, viable sector, and support the recovery. And so far, they announced their fiscal packages they announced fiscal package around 3% GDP. But I think they have more policy spaces. If the situation becomes aggravated, they have more room to use more monetary and fiscal policies. But on the other hand, whether they have to do it, it really depends on the progress of these containment measures, globally as well as domestically. So probably they can adjust their policies depending on how this containment progresses. As for China's role in international society, I think China can play a very important role, especially this time, because we need international policy coordination in coping with coronavirus. For example, many low-income countries need a lot of help, and China can provide financial support through debt standstill and providing liquidity to low-income countries through their swap lines. And also, China is a very important medical supplier in the world. So China can contribute to secure essential medical supplies to these low-income countries.
Okay, on Japan, Reika Kihara from Reuters Japan is asking, Prime Minister Abe has compiled a massive stimulus package to deal with the immediate economic fallout from coronavirus pandemic. How does the IMF assess the package? Is it enough? Too much? Anything left out?
Yeah, I think in April 7, we see the Japan government announce quite big fiscal packages and policy packages, which is amount to 20% of GDP. And among them, we believe that 10% is a pure fiscal policy, and the other 10% is loan and other quasi-fiscal activities through the financial sector. And, many people ask this question. Japan has a high debt over GDP ratio, close to 250, whether they have a room to increase further their debt and the fiscal stimulus. I think this is not a normal time. And, in order to contain the spread of the disease and then, to save the viable sector, I think Japan and any other country need to do some emergency measures. Otherwise, the fiscal cost can be a lot larger later. So I think, yes, definitely it's important for Japan to maintain and do the fiscal consolidation in the medium term. And after the situation become normalized, they have to do it. But at this moment, I think I'm very happy to see very aggressive and proactive fiscal packages in Japan.
Okay. Next question is on Korea. Yoon Kim, Yonhap News Agency, is asking, in the early stage of spreading COVID-19, South Korea had recorded one of the highest number of confirmed cases. Even with that, the IMF projection on GDP growth of South Korea would be only minus 1.2%. Relatively small contraction compared to other G20 countries. Could you explain the reason for it?
Yeah, I think so. Minus 1.2% will be a shock to Korean people who has never experienced a negative growth, in the history. But I think the main reason why the growth slowdown in Korea is smaller than other advanced economies is because of they contained the virus relatively quickly, and then that allowed them to have a partial lockdown compared with other complete lockdown in many advanced economies, which allowed some economic activities, can move back quickly to in the recovery path. But I think still, whether considering the Korea's heavy export-oriented structure, I think their recovery will heavily depends on the growth prospect of the global economy.
Okay, one more question on Korea. The Korean government is planning to use cash transfer as disaster relief policy, but with low unemployment rate, there is a question whether South Korea need this as part of stimulus package. What is your view?
Actually, I think I got a lot of these questions recently after the U.S. actually introduced general cash transfer policy as a part of their program. I got a lot of questions from our authorities in the region that whether they have to do this general cash transfer in their own countries. It's not just for Korea, but many other Asian countries ask the same question. In my view, whatever, whether U.S. do something is not necessarily mean that that policy is good for many Asian countries. U.S. has a dollar, international currency, and they have a more policy room to do many other policies together. But on the other hand, many Asian economies many Asian countries do not have an international currency, and then also many countries have a limited policy spaces. So in their cases, I think that the targeted approach and make a decision about the priorities of the policy is very important. So even if they need to use a cash transfer, I think using cash transfer in a targeted way to protect poor and vulnerable segment of population, to protect their livelihood is important rather than giving the general cash transfer to all people. And then also, more than anything else, at this moment, how to prevent temporary liquidity problem to develop into the solvency problem is a key. If many small and medium enterprises and the self-employed people is now has seen the big drop of their revenues, and if this continues, many of them will bankrupt, and that will cause a massive unemployment. If that happens, the fiscal cost will be much larger. So instead of boosting general aggregate demand at this moment, maybe targeting to the sectors and people who was hit hard and protecting the job, and then prevent the liquidity problem going into the bankruptcy problem, that should be a priority at this moment.
Okay. Let's move on to India. Lalit Jha from Press Trust of India is asking, how do you see the measures being taken by the Indian government to address the challenges and save the economy? What are your recommended steps that India needs to take, both in the short and medium term?
As I mentioned in my opening remark, we welcome the India government's proactive decision to have a significant lockdown to prevent the spread of the disease. I think that can cause a significant drop in economic activity. Growth rate will go down, definitely. But I think that's a very wise and important decision to minimize the long-term cost of this disease spread. And the India government and the central bank already announced some fiscal stimulus as well as monetary policy easing that is in the right direction. Whether that is enough, I think that depends on how this containment policy, which is just adopted, how successful it will be. So I think government and then will definitely adjust the scale of their stimulus packages depending on to see how this containment policy will work. And then I hope they can be successful. But if the situation becomes aggravated, then I think in the short term, they have no other choice but to use more fiscal and monetary policies to contain the slowdown of the economy. And I think after this coronavirus crisis is stabilized, then definitely they have to go back to the structural reform for more inclusive growth and India, such as focusing more on infrastructure, all these things. But that one, I think, still they have room to take care of the first task first.
Okay. On ASEAN countries, Nata Komalvardin from Thai PBS is asking, what is the economic impact of COVID-19 among ASEAN countries? And what is the situation in Thailand in particular? And then I would like to take one more from Indonesia. Karina from Kompas Daily newspaper. IMF has revised Indonesia's GDP growth forecast to 0.5% for 2020 and 8.2% in 2021. What's the main factors that make recovery very robust?
Okay, I think ASEAN countries, depending on the countries, we see they are at a different cycle of this pandemic curve. But in general, except Singapore, which was affected early, many ASEAN countries are in early stage of this pandemic curve, but they are very cautious and they are now introducing more preemptive lockdown and then also aggressive policies. But on the other hand, by structure, ASEAN economies are more service-oriented and then also tourism particularly in Thailand, has account for a large part of the economy. So even before the virus spread in that region, they were quite hit very hard. That is main reason why we revised down Thailand growth rate to minus 6.7% this year. But on the other hand, Thailand has policy spaces. And so far they announced about 3% of GDP fiscal packages. But last week I heard that they announced the second phase of the fiscal stimulus, which amount to about close to 9% of GDP. We need more details to check the exact size. But I think they are proactively reacting to the current situation of the spread of the disease in that region. Indonesia, I think, also do a lot of proactive policies. Central Bank announced many loan programs, lending program, and they are using more fiscal resources to fight for the coronavirus. So they are policy-wise, they are in the right direction. Whether they will have a V-shaped recovery, in general, I think many people ask, why you are assuming V-shaped recovery in Asia, but I don't think this is really V-shaped recovery. Because what we are assuming at this moment is that since the growth rate in 2020 in many Asian countries, it sharply drops, technically speaking, it will rebound. But most of the Asian cases, if you compare the pre-crisis growth rate and then the level of the GDP 2021, despite this high growth rate in 2021, we are actually assuming the level of the GDP in 2020 will be lower than the pre-crisis forecasted GDP level before the crisis. Having said that, also, I think there is a upside risk and the downside risk in our growth forecast. Upside risk, the forecast is very hard this time. So for example, if vaccine is developed quickly, then I think we can have an early recovery, and then there can be a huge upside potentials. But on the other hand, we are assuming that the peak of the virus spread will be reached in the second quarter of this year globally. And then globally, the recovery process, not just one country, globally will start from the second half of this year. If this assumption is not true, because of the heavy dependence on export, Asia's growth forecast that we are assuming may be too optimistic. So at this moment, I have to say that it's very hard for us, pure economists, to actually focus what's going to happen in the future.
Next question is on Singapore. Lok Wei-su, Channel News Asia, is asking, Singapore has set aside about 12% of its GDP to fund COVID-19 support measures, and it's dipping into its past reserves. How does the IMF view Singapore's fiscal stimuli, and how do you see Singapore's recovery path?
Actually, I think I can understand why this question has come from. As a person who knows Singapore economy well, I think this 12% of expansionary fiscal policy is never heard of in Singapore, who emphasize always sound and conservative macro management. They never run the fiscal deficit in a large amount. But I think, as I mentioned many times in this press conference, this is unprecedented time. And if you compare with the fiscal package magnitude with advanced economies and Singapore's 12%, this 12% is basically in line or even lower end of what Europe's and the U.S. is now currently doing it. So I think temporary increase of fiscal stimulus packages to coping with this current risk, I think is unavoidable. And then it's very lucky for Singapore to have that policy space because thanks to their very conservative economic management in the past. Whether this large fiscal stimulus package will guarantee the recovery of Singapore, that will be very hard to say, as I mentioned, because Singapore is a very open economy, and it depends not only on what they are doing, but also how the whole global economy will change. And unless this virus is contained globally, it will be very difficult to say Singapore alone can recover. At the same time, also, we see some sign of domestic situation is a little bit deteriorated. So containing domestically this virus spread again is also another challenge for many Asian countries, including Singapore.
Let's turn to the Pacific. Shane Wright is asking, why are Australia and New Zealand taking larger hits to real GDP through 2020 than other parts of advanced Asia?
Yeah, I think their slowdown is larger than other parts of Asian countries, but quite comparable with other advanced economies in U.S. and Europe. But I think the main reason of larger slow revision is, I think I can think of three factors. One is that these two countries, Australia and New Zealand, their dependence on service sector is larger. For example, tourism and education. Many foreign students are studying in Australia and New Zealand. So service sector hit harder. And also, I think commodity price decline has a heavy toll in Australia. And third, their dependence on China. And Australia's and New Zealand's export is heavily focused, linked to the China. And then you know that China was hit hard in the beginning of the year. So Australia and New Zealand economic slowdown already started before the start of the global slowdown.
Okay. Nepal. Sega Gamir, My Republica, has two questions. What is your assessment on the COVID-19 impacts on Nepal's growth momentum? And what's your view on the government's relief package? And secondly, the cabinet decided to start negotiation with the fund to secure financing support. Can you update us on where things are?
Like many other countries, Nepal economy is affected by its own domestic containment measures. But at the same time, they have seen the sharp decline on remittance and then also the tourism arrivals. So it hit very hard too. But government, rightly so, focus on more expansionary policies to help the health sector and then also poor segment of the population. But they actually need more fiscal resources to combat this, further escalation of the crisis. So we are very happy that we received a request from the Nepal government for our RCF rapid credit facility. So I hope that we can process it very quickly. And at the same time, last week, we provide Nepal debt relief about $4 million from our catastrophic containment and relief fund.
Similar question from Maldives. Naif Ahmed, Sun Online, is asking about where things are on the negotiation with the IMF to draw US $30 million. And secondly, what are your suggestions for reviving our tourism industry and diversifying the economy of the Maldives?
Okay, I think we received the request for Maldives, RCF program, and then it's about 29 million, not 30 million. I hope that we can go to the board sometime very soon, next week or week after. So we want to process it quickly. As for the question about diversification, in our last article for missions, our team discussed about the several ways to diversify the economy, including to make agriculture sector more adapted to the tourism sector, and then also some fisheries, investment in fisheries to increase the value added of its export. And to do that, I think some fundamental structural reform, such as increase the education quality, and then also the energy stability in the region, those kind of reform agenda has to be continued.
We have a question on Sri Lanka. I was wondering if we could answer to Asante's question on the request and the current program. Has Sri Lanka made any request for debt relief or any special corona funds? Also, what is the status of the current program review?
Yeah, we received a letter from Sri Lankan government about our rapid credit facility, the program, RCF RFF program. So we are now start to review it, and we are now discussing with the government whether they want to switch their previous program into our new rapid facilities. So we will discuss this week.
Okay. So our last question is from Cambodia. Daniel Machete, Southeast Asia Globe, is asking, what is the economic impact of the pandemic to Cambodia and imperatives to sustain its economy?
Yeah, I think Cambodia, is at the early stage of the pandemic curve at this moment, like other Asian economies. But they have seen its impact already. For example, like I heard that they already see that the 60% decline of the tourist arrival, and then also, majority of their garment industry, which is basically driving force of the growth, has seen that their order is already canceled from Europe and US. So I think the economy will be hit hard. So we revised down their growth rate to minus 1.5%. But if you see just minus 1.5, given that all others are negative, you may say, but you remember that their growth rate prior to the crisis, we expect their growth rate to be 7%. So actually it's like a more than 8.5% decline compared with our pre-crisis forecast. So economy hit very hard. And unfortunately, unlike many advanced economies, Cambodia's policy space is relatively limited. So I think it's very important. Cambodia government is doing their best, but it's very important. It's not just for Cambodia a problem. Many frontier economies in Asia, given their relatively lag of their policy spaces, they have to really focus on where to prioritize, and then also where they have to, who they have to protect first. And at the same time, I think this is one of the reasons why the international community has to provide more resources for those countries.
Okay, this concludes our briefing today. I received many emails and notices that audio of this briefing at the beginning was not working for many people, but we will make sure that recorded video will be made available as soon as we can, and the transcript will be made available as well. Sorry, we could not take all the questions that you submitted for us. We'll try to get back to you as much as possible bilaterally. On behalf of all of us at the IMF, please stay safe. We are all in this together. And see you all next time, hopefully in person. Thank you.
Thank you.